This is one of those times where I wear two hats as both an ASBC board member, but in this context as the head of the DOL agency review team. We obviously, during our time in the Obama administration, really valued the close working relationship we had with the ASBC, not only in terms of the policy ideas, but really in terms of amplification of our initiatives. And when I look at this list of things that you all have highlighted, I can think of work that we've done on virtually every single one of these issues during the Obama administration. So we look forward to being the partners with you again on this. I'm going to just skip kind of long introductions. Josh Orton from our team is on as well. Josh is a longtime Senate guy as well, and has been invaluable to us in terms of these outreach sessions, as well as his policy expertise. So I know you guys have a lot to cover, so I'd rather just jump right on in.
Okay, excellent. And Kathleen, is everyone on that has got, yes? We're good to go? Okay, well, great. Well, Chris, thanks for the opening words, and Josh, thank you for joining us as well. As you know, Chris, you were just beginning to say, we just really appreciate this opportunity, to begin to build a strong working relationship with the Biden-Harris administration, in particular with the Department of Labor, as you head up the agency review team, as just an indicator, and to really connect that with our business and investors. It's been a difficult 4 years, going back for the 8 years under the Obama administration. There was such a strong relationship that we had, and sort of being able to lift up the voice and the perspective and the priorities, and to work together to advance, a more equitable and sustainable economy, and to be able to partner with the Department of Labor to do that. So we're excited to be able to do that now. And, Josh, for your sake as well, if you're not familiar, we're a coalition of business and investor organizations and companies that are committed to really advancing market solutions, and in particular public policies for a more equitable and sustainable economy. And we have partnered just recently, with Social Venture Circle, which has doubled our individual member businesses and the like, and given us a greater strength now of engaging investors and businesses in order to advance this agenda. And collectively, with all the other business organizations that are members of ASBC, we're representing over 250,000 companies, and focused on, as you begin to understand, a range of issues, from high road business and workplace issues, and worker ownership, and race and equity, and access to capital and sustainable procurement, all under the frame of working to build a more equitable and sustainable economy. So for today, we've pulled together a number of short recommendations. And Chris's recommendation: don't send our 100-page document with all the incredible work that we did on creating an economic system that works for all, but really looked at what do you do on day one? What do you do in the 30, 60, 90 days? And so we have that document that we have shared over with you, and as new ideas emerge, we will certainly begin to share those. And we've invited a number of our members to join us today, both to present some of the top line ideas of both those recommendations, but also some larger concepts of how, we're looking at issues like race and equity, ownership and transition of corporate form, and the like, and to begin to percolate at least some of the midterm and longer term opportunities. But with that, I just want to emphasize again, our appreciation for you all taking the time, and then two, that this is our moment to really connect, the importance of the workforce in America and those that have been ousted out, and the need to rebuild back better and fairer, the labor unions that we've connected with over time, but most importantly, the business and investor community that we represent, and our desire to really work hard to really move forward with a more equitable and sustainable economy. So we're going to jump right in now, and the hope is we'll go through these presentations, and then we'll get to also a time for others to share some additional ideas, thoughts, and questions. So with that, I'm going to turn it to Thomas Opal.
Thanks, David. And I'm going to quickly kick it over to Carolyn to talk about the memo that we've prepared for your transition team, for the ART team, Chris. Carolyn?
Hi,
You want
everyone.
to throw up your slide as well?
Yes, are these, sorry, I didn't have time to run these slides. So just let me know if the slide doesn't change over. Okay. Hi, everyone. So I'm just going to really quickly go through this for those that didn't have a chance to read the memo, or, who are just joining the call now. So we prepared a memo for the ART and really focused on these four sort of, buckets, pillars, if you will: entrepreneurship, family leave and family support, a livable wage, and then the initiative on inclusive economic growth. So in the first part of the memo, when we go to entrepreneurship, our recommendations are really aimed at achieving two goals: access to finance and access to broadband. Just looking at what the sort of key areas are that are preventing access right now, it seems like those are the two most critical areas. And then a few areas that we are recommending the DOL look into are the ETA and these training options, making sure that these training options are accessible to all. And then also expanding the Workforce Innovation and Opportunity Act to making sure that broadband infrastructure and broadband activities are allowable. When we go into paid family leave, so, as we know, this wasn't included in the latest legislative relief effort. So ASBC is looking to really, drive home this idea that that was a, it was surprising that it wasn't included in that bill. And so looking to make sure that the White House is ensuring paid leave family relief is available. We know from recent data showing that 2.2 million women have left the workforce since March, and men are returning back to work currently at a much faster rate. So that being said, just taking a look at what the DOL can do to work with FEMA, perhaps. I know this is a little bit more of a creative suggestion, but it was the Disaster Relief Fund was used during Sandy for areas around childcare, and through the lost wages assistance program, funneling this support through state programs to ensure that households get some sort of relief around family support. We also are putting in our memo the recommendation that was shared by the Paid Family Leave Coalition, which we are a close ally with, to issue the OSHA emergency temporary standard that includes medical removal provision. So then this, I'm going to, let our speakers really expand on. This is pretty self-explanatory in terms of expanding the workplace's executive order with these additions. And then also, rolling, as, I think is the DOL, I'm sure, is already aware, rolling back this executive order on combating race and sex stereotyping. And then we also have, I think, some speakers on who will speak to the initiative on inclusive economic growth. This is an initiative that was presented by a coalition of, I think, over 500 organizations to be initiated through the National Economic Council, but in conjunction with a lot of other going really across agencies to ensure that economic growth is inclusive. So that is sort of a run through of the memo. I also included in the chat a link to the memo so you can see it in full if anybody would like to take a look. And I'm happy to answer questions at the end if we have time for that. But I think for now, I will turn it over to our first speaker.
Thank you, Carolyn. My name is Rebecca Hamilton. I'm the co-CEO of the W.S. Badger Company. We're a family-owned business, and we have about 100 employees. We're a rural manufacturer out in New Hampshire. And I really appreciate being able to say a few words on paid family leave. This is something that we've been advocating for years, but it's something that's even more critical right now. We're in a position where we actually are coming into this next year fairly solidly in terms of the sales and our ability to manufacture. And we're struggling because over half of our employees aren't able to work full time because they're caring for their children. With the amount of money that they're given by the government for the time they can't work, we've stepped in to compensate for that. So we're paying additional amounts for the employees that are caring for their children, while we're also having to find additional help to cover the work that they're unable to do. So it puts us in a very challenging position right now, particularly during this crisis. And so I think that in the immediate future, having some kind of stopgap measure that supports the families that are dealing with this crisis and being able to support them in caring for their family. Because as a business that believes in high road work practices, we want to support our workers in putting their family first, and we have to be able to run our business. And so we need to support that gap so that we can do that. And then in the long term, we also recognize that the strength and health of our business comes through caring for our employees. We have very high retention rate, and we're able to find really good employees during difficult times because of how we treat our employees. And it's also something that is very costly. And so it's a balance of what we can do as a business to support our employees and what we would ask for from our government.
Thanks, Rebecca. Next, we're going to hear from Joe Sandberg with Aspiration Bank on raising the minimum wage. Joe?
Thank you, everyone. Thanks for inviting me. I'm going to begin by sharing my two recommendations. I'm going to give some texture about why we need those to be implemented, and then I'm going to conclude by repeating those two recommendations, because I know what you need are specific ideas that can be implemented in the early part of the administration. First of all, please require that all federal contractors have a $15 minimum wage, period. Not only will that help all the workers of those contractors, but that will create powerful upward wage pressure on businesses who are paying below a living wage. Second of all, please return the overtime pay rule to the Obama rules instead of the reversal that the Trump administration made. The increased salary threshold for overtime pay that the Obama administration implemented in 2016 was one of the most powerful and widespread raises for working people since FDR. And President Trump rolled back that to the tune of 8 million people now being left out. So those are two things that the administration could do right off the bat with executive power, with no involvement from Congress, that will create substantial benefits to working people. Now, the texture I want to add is we need to raise the minimum wage because of our history, because of morality, and because of economics. I want to read this direct quote from FDR, which is, "It seems to me to be plain that no business which depends for existence on paying less than living wage to its workers has any right to continue in this country." That was in 1933 when the minimum wage was created. And in that statement, FDR captured all of the historic, moral, and economic contours of why it's critical that we raise the minimum wage to $15 across the board. First of all, he'd be disappointed in what we've failed to do over the last 60 years in particular. If the minimum wage had risen at the rate of productivity growth since 1960, it would be $22.50 today. That's just math. I'm a business person, and I am most interested in results, not ideology. And the track record is that we have failed for 60 years to ensure that the minimum wage of FDR has kept pace with the prosperity that executives and big monopolies have created and enjoyed for themselves. Second of all, there's a big economic pitfall that's been created by a low minimum wage, which is it actually stifles innovation. And here's why. Allowing companies to pay subsistence wages means that they aren't pressed to innovate to create great new products that their customers love, because they rely on the laziness of paying crap wages to their workers. Entrepreneurs can figure things out within whatever rules you set for them. And I bet what you'll find is that as we raise the minimum wage to be a living wage, you're going to see a lot of businesses that form around true innovation instead of hundreds of billions of market cap that have been created in this economic cycle by entrepreneurs who claim that they're innovators, but are really just exploiting loopholes in labor law and building wealth on the back of paying subsistent wages. And then finally, it's just good economics. We have a consumer-based economy, and a lot of economists much smarter than I have tried to figure out why growth has been sluggish for decades. But I think you can learn in elementary school all the math you need to explain that. We have a consumer economy where consumers don't have any money. And everyone who has all the money, they don't need to buy anything. So the people who need to buy things don't have money. The people who have the money have run out of things they have to buy. The simplest recipe to truly reach the kind of 3 or 4% annual GDP growth that both Democrats and Republicans have aspired to is to put more money in the pockets of working people. And in conclusion, I'll just repeat the two things that I hope the administration will do right off the bat are, first of all, require that all federal contractors have a $15 minimum wage. And second of all, return the overtime pay threshold to the Obama standards so that we bring 8 million people immediately into the fold with immediate raises. Thanks.
Thanks, Joe. I love your math.
Thank you.
Even I can do that kind of math.
Thank you.
Our next presenter is April DeSimone from Designing the We. And in addition to being just a brilliant design architect, is also an ASBC board member. So April, talking about race and equity.
Thank you, Thomas. Thank you, David, and the rest of the ASBC team. Really such a pleasure to really expound upon a very critical moment, again, our nation finds ourselves in. And a bit of contextualization around the work that we do as designers. It's not just architecting buildings and sort of creating master plans. It's understanding how things operate within an ecology. So what we have done is really created a baseline contextualization that really tries to get to the granular level of why topical solutions with good intentions really does not equate to a disruption of systemic inequity. As we know, New Deal policies under FDR really promulgated sort of what was already existing in private practice in our country. And what you're looking at is a redlining map and subsequent decades of what has happened, particularly in redline communities. We know why this correlates directly to outputs of labor is that labor dictates opportunities and our quality of life. And if we have systemically created a condition where those who either by race, religion, et cetera, are not accepted or able to acquiesce into livable wages, then we have failed to uphold the principles and ideologies of our democracy. So what we're looking at here is really understanding that if we're going to address not just pass the laws, we know that it's not going to take, it's not going to happen overnight as to what has been created for centuries. And what becomes really important in understanding the dynamics is when we look at education, employment, and family income today, we sort of promulgate these as sort of the great equalizer. What we really need to understand is that we cannot combat 21st century challenges with 20th century programming and solutions. And what we need to bring up is if education is not a great equalizer, particularly because it's been our geographical footprint, because of, again, our labor dictates where our children go to school, what are things like apprenticeship programs? I know the Department of Labor is doing things with the registered apprenticeship program. How do we expand educational opportunities that don't just harness the traditional educational track that we know has kept so many out of the opportunity to engage. And of course, education is key to income and employment. So what are the opportunities now to really address things beyond solar panels and what that means in places like my community in the Bronx, to really harness and leverage the power of the federal government to heal the social fabric of our communities through labor, and understand that for far too long, labor has not been equitably distributed and acknowledged. And our economy has been literally built off of the backs of demographics that continue to be carved out of today's opportunities. So it would be great to see the Department of Labor really create equitable programs that really measure and hold accountable the programming that is trickling down. What are the metrics to show that systems have been changed? How are we advancing so that, again, that word inclusive entrepreneurship and inclusive economies really are at the table for all. And in doing so, we really scale human condition in our country. Thank you.
Thanks, April. So next, talking about workforce representation is another ASBC board member, Denise Boyer from American Income Life. Denise?
Thank you. Thanks for giving us this opportunity. I'm Denise Boyer with American Income Life. I was a consultant now, but I spent 35 years with a very successful business who also has a unionized workforce and has been at the lead of high road workplace development. I want to talk about a couple of things. The first thing is in the support of a livable minimum wage. The one thing to know is that I believe all of these suggestions that we're making for policy and for executive order really provide an opportunity to bring business together, labor organizations together, and workers together. Business has been very supportive of a higher minimum wage, and we know that through the state battles that we've done successfully in building coalitions with labor unions and workers. 80% of the business executives who were polled by a Republican pollster, Frank Luntz, have supported a raise into a livable minimum wage. And I think that's a really important thing to consider. There's so many bridges to be built with business on this specific issue. Small business owners represented in a poll basically support the minimum wage at 60%. And a lot of times it's the pushback that you might hear or we might hear that small business does not support raising a minimum wage to a livable level. And it's just actually not true. And that bears out in the state testimonies that we've helped gather in many hundreds of businesses across the country. And I know that this is a lead up to passing in the Senate the Raise the Wage Act, but I think that modeling by the Department of Labor and the federal government what good practices look like in livable and wage will really set the tone for how do we bring business, labor, and workers together. So by reinstating the Fair Pay and Safe Workplace Executive Order with the following additions, we think this is a really good start. Mandating that federal contracts are awarded to companies that remain neutral in workforce organizing efforts. Why that's important? Workers having a voice at their workplace, whether it's through collective bargaining or other means, is very, very important. And mandated that federal contractors remain neutral is imperative to show as we try to do labor law reform and some other things down the road. Federal contracts should not be awarded to companies that outsource their work overseas, and companies that offer benefits to their workers should be prioritized in receiving federal contracts. Again, voice of workers, it being a part of this, as well as business and labor organizations, is really going to be critical to creating an economy that really is in an equitable position for all stakeholders. The other thing that we want to suggest is reversing the executive order on race and sex stereotyping Bringing policy around that values the learning of gender and race equity is very, very important. Again, modeling to the private sector how to treat workers, how to listen, how to have voices at the table that represent all stakeholders. So again, we believe that business, labor organizations, and workers together are really the key to building an economy that is equitable for all stakeholders. And these are just very quick things that can happen. I also look at the Fair Pay and Safe Workplace executive order being reinstated, opens a lot of doors for other businesses and workers to work together to protect the workers. And I think about COVID-19 at the packing plant workers place right now. The emergency temporary standard that could be put in place by OSHA brings business and labor together. Many of them are small and mid-sized companies, packing plants that aren't opposed to protecting their workers, but we really need enforceable standards. And these are ways, again, that are just the bridges to bring these groups together, us as business organizations and business leaders who want to do right and do right by our workers. And again, the Department of Labor has an incredible opportunity to do modeling for what we can be doing in the private sector as well. Thank you.
Sorry, thank you, Denise. And I couldn't help but think as you were talking about that if we needed yet another reminder of why gender bias training is still important and necessary. The column in the Wall Street Journal about Dr. Jill Biden may be the most recent reminder. Unbelievably stupid, foolish, misogynistic, all the other things. Our next presenter is Michael Peck, representing One Worker, One Vote, also an ASBC board member, I'm proud to say. And Michael's going to talk about worker ownership. Thanks, Michael.
Thank you, Thomas. And it's always hard to follow Denise and April, but I'll do my best. So I'm going to make two principles, going in principles as background, and then three suggestions. So for the principles, the pandemic has involuntarily repurposed the most economically vulnerable from the back to the front of the line. Now they're the newly indispensable for saving and serving the lives of others, but without any commensurate economic remuneration for themselves. About 10% of the US labor force has an equity relationship to their workplace. So what about the other 90%? Increasingly, both social impact and traditional funders, hedge, pension, private equity, seek to finance worker takeovers of companies now using ESG and SDG metrics because stakeholder-owned firms prove their superior resiliency, especially during downturns like this one. And such performance improves shareholder returns. So here, in that context, here are our three suggestions. First, understand who we are. The Department of Labor can recognize and minimize the growing socioeconomic demographic divide between worker ownership and employee ownership communities. They used to be more or less the same, but no more. Employee owners are now a subset of worker owners, but it is worker owners who are the most marginalized and left behind. America's rising majority-minority workforce will be more race and gender diverse, older, and with higher education levels, starting with women members. This new worker ownership majority includes informal gig economy workers, formal freelancers, 1099 contractors, temporary workers, organized labor, alternative labor, undocumented labor, commoditized labor, including forced prison labor. 1 in 3 American adults have a prison record. This more diverse American workforce frame supersedes geographic labeling because its profile is practically ubiquitous throughout blue and red states, with a few exceptions, all magnified by the pandemic and economy. Second, we can use what we have. Let's fulfill the potential of the bipartisan August 2018 Main Street Employee Ownership Act by creating an interagency task force with Department of Labor, SBA, and Department of Agriculture to make loan provisions to ESOPs and worker cooperatives finally an SBA reality. It's only taken a few decades. For worker cooperative loans, emphasis should be placed on collective ownership loan guarantees by the business receiving the loan, instead of SBA insistence on individual owner loan guarantees. They just need to change the script, change the vocabulary, and get with the program. We can enlarge the practice scope so that an S-Corp worker cooperative can achieve ESOP-like corporate income tax exemption and the ability to deduct both interest and principal on a worker cooperative loan. This is important because if we want to prioritize the trend of emerging hybrid shared ownership models, such as union co-ops, but there are many others, that are trans-sector, inclusive, and empowering workers by more progressive unions entering ownership structures to increase collective bargaining impact and resiliency, that's the way to do it, the quickest way to do it. The law is already on the books. It was one of the few bipartisan things, maybe the only bipartisan thing passed by the outgoing administration. Third, we can make amends. The Department of Labor can recognize and empower undocumented and marginalized labor entrepreneurial successes by creating another interagency task force, this time with Labor, Commerce, and Department of State, to eliminate the EB-5 visa unfair and undemocratic worker classification abuse. We can democratize the EB-5 immigrant investor visa, that 500,000 benefit, with cash coming from nobody knows where, to allow worker and union co-ops and other hybrid shared ownership structures to provide equal visa access to documented and undocumented worker cooperative owners. This can happen by similarly validating the ownership equity value in their enterprise as skin in the game, entrepreneurial capital similar to any other investor. Barron's reminds us that immigrants make up 14% of the USA population, but 28% of our startup founders and 24% of patent holders. Without that entrepreneurial zeal, the United States would be much less innovative. Axios reminds us that immigrants and their kids founded 45% of US Fortune 500 companies. Thank you.
Thanks, Michael. And probably a great segue from Michael's point about our population with correctional experience or experience with our correctional system is Joe Kenner from Grayston Bakery, who is here to talk about open hiring. Joe?
Thank you so much. And I want to thank the Labor Review team and ASBC for giving Grayston this opportunity. So my name is Joe Kenner, and I'm the president and CEO of Grayston. We are a hybrid social enterprise here in Southwest Yonkers, New York. We are known for, and for those of you who may not know, we are known for making the brownie inclusions that go into Ben & Jerry's ice cream. We're a part of their global supply chain. And we also have the single serve brownies that are in Whole Foods and other channels. And you can also just order them online at grayston.org. But that's not our whole story. Our whole story is actually how we bring people into the organization. We firmly believe that we create a more inclusive economy and thriving communities through employment innovations and work supports. So that's how we hire here at Grayston. And what it takes is just a list. And that is what we call open hiring. What that means essentially is for those who want to be a baker in our bakery, all they have to do is put their name on a list. When that next job becomes available, they get it. No questions asked, no background checks. We don't do interviews. Your first day at orientation is your first day on the job. We've been doing this since 1982. And very proud to say throughout this entire pandemic, we have been operating. The team has been coming to work and they have been producing a record number of brownies, nothing like a pandemic to get people snacking. So across the world, people are enjoying brownies produced by folks that some might have called unemployable, non-essential. Now they are essential, to the point that Tom was making. Many of our folks are the formerly incarcerated. Many are women that had challenges with childcare, homeless, dealing with recovery. We support our bakers through what we call an employment pathmaker, which is a social worker that sits at the bakery and also at our nonprofit and supports our clients through all the issues that keep folks from being present at work whether it's dealing with transportation, housing, recovery, all the issues that many of us deal with. I'm the president and CEO, and I have childcare issues because of this pandemic. So we're all dealing with certain issues, but we want to support our employees because not only does that help them to be thriving professionally, but personally. We're very invested in that. And as a B corporation, I should say, New York State's first benefit corporation, so we're governed by a triple bottom line. We believe investing in our employees. We believe investing in the community, and we believe investing in the environment. But it's through open hiring that we believe, particularly during this time, with the Business Roundtable now embracing stakeholder capitalism. We've seen how the pandemic and just the social unrest has exposed so many inequities in our society. Now is the time for something like open hiring to open doors of opportunity to folks who need it most. And folks, even during the boom times, were excluded from this economy. We believe that open hiring opens that door. And we're very proud. In these last 2 years, we launched what we call the Center for Open Hiring. And the whole idea was to help other organizations, other companies do what we're doing, and to see it really replicated in different contexts. So we're very proud to say that, an organization like The Body Shop introduced open hiring in their distribution centers in North Carolina. They've now rolled it out to both the US and Canada retail operations. And I can tell you, just seeing the initial data that we're seeing from those pilots, it has been tremendous, both qualitatively and quantitatively. We saw in the distribution centers where they cut their turnover rate by 2/3. We're seeing their productivity going up 13%. But we're also seeing other organizations like Giant Eagle in Pittsburgh, Pennsylvania, Arbonne in California, CleanCraft, which is a custodial services company in Rochester, New York, embracing open hiring. And we're also very proud to say that this has gone global. We're working with a nonprofit in the Netherlands called the Start Foundation, where they have 21 pilots going on in that country across a range of different industries, opening up doors of opportunities to nearly 300 folks. So we want to see this continue. We believe we are part of, we're at a major point in our history, and this could be our watershed moment if we make it one. We want to see more companies doing this. We want to see more companies embracing this, and we stand ready to educate and train, and inspire others to do what we're doing. So to the extent we could be a partner with the administration on this, we're more than willing to. So we appreciate it. Thank you.
Thanks, Joe. And I'll also say, Chris and Josh, just a tip for the advanced team. So many of these businesses are worth going to see, but I will say, particularly at Grayston, if you go there, he'll throw in the brownies for the meeting. So
no, normally I would come to a meeting with brownies, but
yeah,
virtual world.
Yeah, yeah, he would have. So
send me your address and you'll get a box.
Downside to having a virtual.
Well, I will say, Joe, I sampled your brownies since one of your folks, I moderated a discussion with them at our last summit. So they're fantastic. So thank you.
Thank you so much.
And thanks again, Joe. And next from Iron Horse Vineyard is Joy Sterling talking about the importance of broadband to the workforce and labor, and an issue that I'm particularly interested in myself. So, so Joy, take it away.
Thank you. Thank you so much. I'm really very pleased and proud to present to you. And I too am sorry I can't provide samples. Certainly my samples make for a really great meeting. Broadband is a passion project for me. And I feel to my core that if we can provide broadband universally, we will, so much will flow from one solid accomplishment. And it is an infrastructure issue. It is the cheapest form of infrastructure. It is an issue that, as I'm sure everybody on this call realizes, this is not something that the marketplace is going to solve. It needs to be, the digital divide needs to be closed by a policy decision and government funds, plain and simple. For what is too expensive, quote unquote, according to the telecommunications firms, because the return on investment simply isn't there. When it is a community investment, the return on investment is unbelievable. It's $4 to $6 on every dollar invested to the community. So we need to look at this in a different way. The recommendation that I would like to make today that can be effectuated in the first 90 days is an executive order. There was, during the Obama administration, something called the White House Rural Council that some of you may recall, but was instituted by executive order. It brought together all of the agency heads to brainstorm. There's some question as to how effective it really was in terms of policy. Regardless, it was dissolved by executive order by the Trump administration, which means it can simply be reinstated by executive order. And to my way of thinking, repurposed, rededicated to focus on broadband policy and finding the funds within the different agencies to simply make this happen. So that is the concrete recommendation that I have. I hope to believe that there is no reason for me to preach to the choir here as to the absolute irrefutable need for broadband, both rural, but also to unserved parts of the inner city. The pandemic has laid bare that the digital divide is not just a crack, it is a wide gulf. And the ability to be able to work remotely is absolutely critical. So my recommendation is an executive order to create the White House Broadband Council.
Thanks, Joy. I won't say last, I will say to conclude our presentation, we have Holly Anson-Barstow with B-Lab and Fran Siegel with the U.S. Impact Investing Alliance. I hope I got that right, Fran. And I hope, I'm not sure whether you're representing them today or B-Lab or the multi hats you wear. So I will turn it over to Holly and Fran.
Great. Hello, everyone. Thank you for allowing us to join this incredibly important call. My name is Holly Ensign-Barstow. I'm the Director of Stakeholder Governance and Policy at B-Lab. We are a nonprofit. We're behind the B Corp certification and the Benefit Corporation legal form. We represent over 3,500 certified B corporations in 70 different countries and 150 different industries. And we've also used a bipartisan approach to work with our community as well as partners like ASBC to pass benefit corporation statutes in 39 different US jurisdictions and 5 other countries. I'll now pass it off to Fran to introduce herself and to talk a bit about why we're joining you here today.
Thanks, Holly, and thanks to the American Sustainable Business Council for inviting us to join today. I'm Fran Siegel, Executive Director of the U.S. Impact Investing Alliance, which is a nonprofit, nonpartisan organization seeking to build the practice and field of impact investing through engaging with leading investors, endowments, and financial intermediaries around impact investing, which we define quite broadly to include investments made across asset classes and geographies with a range of strategies. So we, from the publicly traded companies to private asset classes, so the full range. And ultimately, we're working toward a world and an economic system that places measurable social, economic, and environmental impact at the heart of every investment decision. We believe all investments have impact, and indeed all actions have impact, but they are largely opaque to the consumer, to the investor, and to citizens. Through our advisory board and other groups that we convene, our stakeholders represent investors with hundreds of billions of dollars in combined assets, as well as intermediaries who collectively manage trillions in assets. And again, they represent a broad swath, so from the private asset classes to larger capital markets. But I'm here today on behalf of a coalition of more than 40 like-minded organizations, groups like B-Lab and the U.S. Impact Investing Alliance, alongside a Media Network, the Skoll Foundation, and the American Sustainable Business Council. The groups in the coalition drive progress toward a wide range of topics, from corporate disclosure on social and environmental issues, to community development finance and access to capital issues, to transitioning from shareholder capitalism to stakeholder capitalism. But what we all have in common is a desire to secure a just and equitable recovery from the current crisis set that we are amidst. We recognize the urgency of the moment and many challenges facing the incoming administration. And we believe that it will not be possible to truly build back better if the status quo continues, in which businesses and investors remain wedded to short-term financial gain without regard to the impact of their action on society and the environment. So our coalition is proposing that the administration, through an executive order, establish a White House initiative on inclusive economic growth through the National Economic Council to promote a streamlined vision for advancing the Biden-Harris administration's priorities on economic recovery, climate change, and racial equity. We think that such an initiative, again, through the NEC, would offer the best opportunity to coordinate action between federal agencies, along with the business and investor communities and key civil society allies that we represent, on policies that will not only support a just and equitable recovery, but will support the country's long-term interests. So just to put a fine point on it for Chris and others who were joined from the transition team from the Department of Labor, the coalition members have been very concerned to see the regulatory backsliding by the Trump administration's Department of Labor and the SEC on critical issues like fiduciary duty, shareholder engagement rights, and ESG disclosure. We really see these issues as matters of American, national, and global economic leadership and competitiveness. Specifically for pensions, workers have a deeply vested interest in the sustainable management of their employers, and tools like proxy voting, analysis of ESG metrics, and other impact management activities have critical implications for their near and long-term economic well-being. We believe that ESG factors indeed have pecuniary impact, and not taking them into account, we believe, breaches fiduciary duty. We know that state pension funds, while not being regulated by ERISA, are very concerned about the newest Department of Labor regulations as having a trickle-over effect for public pension funds, and that these rules really impact, they shape the asset management industry. But we believe a White House initiative on inclusive economic growth could help work with the incoming Department of Labor and SEC staffs on how to address these issues that have implications for both agencies, like proxy voting, ESG investing, and mandated corporate disclosure. And in this way, a White House initiative would help the administration to pursue a cohesive policy agenda for sustainable finance and capital markets at a time when bold and effective solutions are needed more than ever. As part of the White House initiative memo, and I think there might be a link to it in the American Sustainable Business Council materials, you will see in one of the appendices a set of policy recommendations from coalition members, including the U.S. Impact Investing Alliance, including B-Lab and Shareholder Commons, and the American Sustainable Business Council. So many ideas behind this coalition about how to drive inclusive prosperity and growth. So looking forward to working with you, and also to answering any questions you may have about this White House initiative proposal. Thank you.
Thanks, Fran. And Holly, did you have any other things you wanted to add? Okay, great. I will say that we had one comment in the Q&A suggesting a contract advantage to certified B corporations, which you probably saw, Chris. But we've got about 10 minutes left. First of all, let me again thank Chris, you and Josh, and the whole labor ART team for being so transparent, so willing to meet with us. This is really the second meeting we've had. But and appreciate your willingness to hear these presentations. And Chris, let me just turn it over to you for any immediate thoughts you may have.
Well, I appreciate the thoughtfulness of these proposals. These are things that we have been thinking about, and ones that I have been working on for a long time, which is why I'm an ASBC board member as well. We have forwarded up the idea for the White House Council on Inclusive Growth. I will simply caution that's probably one of several dozen White House councils that have been proposed, and but I agree with the concept of elevating that. Trying to get that done is a whole nother thing. But obviously within what the Department of Labor can do, so many of these things that you have highlighted, again, whether it's ESG investing, whether it is open hiring, whether advocacy on minimum wage or on family paid leave, these are things that we can either do on our own or do with use our bully pulpit. And I would simply say this. I mean, we are. I think one of the powerful things we did towards the end of the Obama administration is really highlight, the different facets of the business community, and that it wasn't a, the idea of, workers versus businesses was a, tired dynamic that doesn't really reflect what the state of things actually are. And it was so helpful getting the validation for all of you on the proposals that we were putting forward, and as importantly, your amplification of it and your telling the stories, and whether it is, Badger, which I highlighted in a minimum wage paid leave, whether it was Grayston in the work that we did in the summit, or every single, mom and pop coffee shop that I visited when I tried to get state minimum wage and paid family leave bills passed around the country. So I would simply, the advocacy front, you all are invaluable, but as much as importantly, your ability to help us tell the story is critically important as well. So we are going to recommend, it's unclear whether Josh and I will certainly be at the Department of Labor on day one, but we'll certainly recommend that our public engagement folks lean on you heavily, as they did during the Obama administration, to continue to find validators for these policies.
Well, thanks, Chris. I knew of your work with ASBC in the Obama administration, and as you say, I think our ability to have folks like the folks represented here tell that story is really important. Josh, any thoughts?
I'll echo Chris. I'm the advocacy seems like such a tremendous value, and I have a deep passion for many of the issues that were discussed today. My the other unmentioned part of my bio is I was Bernie Sanders policy director on the 2020 campaign and senior advisor in his Senate office, and so many of these proposals look quite familiar to me, and I appreciate them very much, and I also think that at a time when so many workers and businesses are struggling and facing the effects of this pandemic, thinking about this moment that we have to build back better, but to change the status quo, and to really think about the relationship between the business community, the government, workers, to the extent that we have one, we have a moment. A moment of opportunity here, and I'm so thankful that everyone here is doing the work to try and use that moment to benefit everyone.
Well, thanks. We've got about 6 minutes left. I want to be cognizant and respectful of Chris and Josh's time, as well as everyone else's on the call. So any other last thoughts or questions or comments?
I have one extraordinarily in the weeds policy question on broadband. If someone wants to answer, I share this passion. My father was a university professor at UW and worked on municipal broadband for many years. I'm interested in the Workforce Innovation Opportunity Act in terms of allowing local cities to engage in municipal broadband. And my question is this: would this include a federal law to sort of supersede the many state laws that have been passed prohibiting municipal broadband that we know that a lot of the huge telecoms have passed? If that's too weedy a question, but I'm just curious if there's a preemption element.
I can't say with Josh, I can't say with that specific bill. I do think that permitting municipalities would be helpful. The issue you find as you get into this is folks who don't want the competition, despite all the talk about free markets and capitalism, et cetera.
Yet they won't go the last mile.
Right, exactly. I remember when I was at the Pentagon, somebody saying actually it was our Assistant Secretary for Research and Development saying, that he felt like the defense sector didn't really understand what competition meant. They just knew they didn't like it. I think that's true of the telecoms and the various providers as well. I think enabling local communities where they can't to be able to do that is critically important. And I'll quickly say something that I learned before I came to ASBC. The average, well, first of all, just in cybersecurity alone, we're not talking about broadly the internet or internet jobs, but just in cybersecurity alone, the estimate is that there'll be hundreds of thousands of jobs that go vacant over the next 10 years. Hundreds of thousands of jobs. That's point number one. Point number two is those jobs will pay an average of 6 figures, starting 6 figures. Number three is you don't need a college degree to learn those jobs, and you can learn them online if you have access to the internet or to something. And one of the suggestions, and Josh, I'll be happy to send you, we ASBC pulled together another group to focus on state and local recommendations to build back better after the pandemic.
Yeah, I'd love that.
And broadband was a pretty significant section in that. I'm happy to send that to you.
Yeah, that would be great. Yeah, it seems like
but
there's
the
so
last,
many, yeah, go ahead.
Oh, and the last point I'll make is I went to a conference actually at which Chris Krebs, famous Chris Krebs, spoke 2 years ago. It was put on by the NGA. And at that conference, one of the things that struck me is, so, you've got these jobs going vacant. They're relatively easy to learn. They pay well. And just as importantly, the chief information security officer for the state of North Dakota lives in Arizona. So you can be anywhere and do the job anywhere else. So you could be, say, in West Virginia or, a formerly paper mill producing area of Northern Maine, or, pick a rural area or pick any area that's, right now having trouble with jobs. Joy, you got a thought?
Yes, one of the first key things that we could do would be to get broadband defined as communication. And that would give us a huge amount of regulatory control. And I think the main thing we need to do is to request politely that the telecommunications firm lead, follow, or get out of the way. And transparency is also a major issue here. And the technology is such that we can, in order to build out infrastructure, we have to know what exists. And in order to know what exists, we need to know what exists. And that, sorry to be, it's all just so darned obvious. But we need to stop allowing this monopolistic control so that we can get what is a basic utility now. This is not a luxury, as we have
it's not HBO.
Significantly learned.
Well, thank you. I didn't mean to send us down a technical tangent, but I really appreciate the passion and the
Well,
I'm just very thankful for your work.
This is what you get and can expect going forward from us, is that we're able to call on, and then many thousands of other business and investors who are, not only playing at the theoretical level, but actually have the practice. And so the praxis, in other words, and why we created ASBC certainly was to be able to play this role and, to have willing and thoughtful partners like we're expecting and hoping from the Biden-Harris administration. So
it's wonderful.
I know we're coming to time, and so we just Thank you, Chris Liu and Josh Orton and the rest of the Department of Labor ART team. Want to thank, Social Venture Circle that's a part of this, and obviously all the presenters that are with us today and the others that joined us and the like. And we will be back at you. If anything we've learned from talking to y'all is that show up often and thoughtful and keep pushing, because we know what gets pushed from the other side of these issues and the like. So we are ready, willing, and able, and appreciate the opportunity to work together. So thank you.
Thank you so much.
all.
Thank you, David. Thank you, Thomas. And thank you to all of you for the great leadership. And we look forward to maintaining and strengthening this relationship over the next, 4 to 8 years.
Thanks very much. And to everybody on the ASBC and SVC side, we're going to be, we're trying to schedule several of others. We have one with USDA on Wednesday. So stay tuned.
Thank you all.
Thank you.
Thanks again. Bye.